So the Federal Reserve, or the Central Bank of the United States, has just announced its new interest rate decision. And in my opinion, it's pretty bullish. Here's why. Hey guys, welcome back to Republic Labs YouTube channel. In this video, we will talk about the interest rate decision from the Fed, or the Central Bank of the United States, and how it might impact the crypto market and the overall financial market to be more bullish in the next couple of days. Let's talk about it. So as you can see, the Fed, or the Central Bank of the United States, has just announced its new interest rates, and the announcement was that interest rate was capped at around 4%. As you can see here, the interest rate was capped at around 4.5% up to 4.25%. This rate was unchanged from the previous month, meaning that the central bank sees no urgencies to lower the interest rate or to increase it. What's bullish about this is that the projection for the next couple of years, and also this year. As you can see here, the Fed also announces their projections for the next couple of years and this year. As you can see here, there's a projection for the current year, which is that the Central Bank of the United States, or the Fed, will lower interest rates up to 3.9% from the current 4.5%, meaning that the central bank is leaning towards a more dovish projection. This alone should be bullish for the overall financial market, especially the crypto market. This is because when the Fed is more bullish, it means that there will be more liquidity in the financial market, especially the crypto market. The liquidity will come from investors who project the market as having more liquidity, considering that the quantitative tightening will be reduced. Also next year, as you can see here, the Fed is projecting that the interest rate will go lower from 3.9% up to 3.4%. Also, the next year after that, the central bank is projecting that the interest rate will go lower again from 3.4% to 3.1%, and the overall long-term projection is at 3%, meaning that the current 4.5% will no longer stand, and the overall target is at 3%. This is overall good for the financial market since a dovish projection means more liquidity for the market. Also, another bullish statement came from the FOMC, as the Foreign Open Market Committee, or the FOMC, usually gives us statements after the interest rate decision publication. As you can see here, one of the statements that was highlighted is that in the beginning of April 2025, the committee will slow the pace of decline of its securities holding. This is done by reducing the monthly redemption cap on treasury securities from $25 billion to $5 billion. Why is this bullish? This is because the statement is an indication that quantitative tightening will be reduced, meaning there's a potential for more liquidity for the market, since the Fed is not really dovish but leaning towards a dovish projection. The $20 billion reduction means that there is less quantitative tightening in the market, so this means there is a potential for the Fed to be more dovish, hence more bullish for the market. After the interest rate announcement, Jerome Powell, as the head of the Fed, also gave his thoughts and statements toward the overall US economy. As you might remember, one of the things that have been causing volatility in the market is Donald Trump's tariff policy. Jerome Powell made a comment on this. He stated that we see this in both market and survey-based measures, and survey respondents, both consumers and businesses, both mentioning that tariffs is a driving factor. He was talking about inflation, meaning he stated that because of Donald Trump's tariff policy, it might be hard to reduce inflation. This means that the tariff policy might be a problem for inflation. However, he clarified that beyond the next year or so, most measures of long-term expectations remain consistent, meaning he stated that there's nothing to be worried about regarding the tariff policy, meaning all inflation is still under control, hence why making the statement bullish for the market. As you can see here, a lot of medias are already talking about Jerome Powell's reassuring tone, meaning that investors are reassured that tariff policy and the inflation will not be a problem in the coming months. Overall, all of these statements equals a bullish sentiment for the market, meaning there's potential for the crypto market to go up again. As you can see here, a lot of medias are already talking about the US stock market, stating that the US stock market had their best day since July 2025, meaning because all of these statements and data, the stock market of the United States is going up again, hence why the crypto market might follow as well. Also, to add to the bullish sentiment, the Central Bank of Japan also kept their interest rate the same as last month, meaning there's no increase in their interest rate. Why is Japan worth mentioning? This is because of the carry trade. This is because a lot of leverage or debt in the financial market came from Japan. This is because Japan has a lower interest rate compared to other countries, especially developed countries. So a lot of investors, especially from developed countries such as the United States, often borrows money from Japan and then use it to invest in the United States market. The difference between the profit from the financial market in the United States compared to the interest rate they need to pay to Japan usually is still considered worth it and profitable for these investors, hence why carry trade is a thing. This is why when the Central Bank of Japan decided not to increase the interest rate, it's good for the overall financial market, as most investors do not need to liquidate their position to overall adjust with the new interest rate because there's no new interest rate in Japan. So the overall sentiment is pretty much bullish. As you can see here, Bitcoin started going up again, currently reaching 86,000 US dollars per Bitcoin. However, the volatility might continue, especially since Donald Trump is still adjusting with his tariff policy. The volatility is pretty much the same as what happened in 2018, which is when he was in charge in the White House. So, while the overall market is bullish, expect a lot of volatilities in the next coming days, since Donald Trump is in charge. Also, don't just FOMO in because of the bullish sentiment, and remember to always keep your risk management plan, so that you don't go broke because of the financial market, especially in crypto. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!